All right, hello everybody. Welcome to Korean Lanta Mentorship. So we're going to review a video by a TikToker named Unbiased Jordan, who has a pretty big following, over 400,000 followers on TikTok, and her experience about how much she spent going to law school. And after we do that, we're going to simulate debt payoff as a law school graduate with what we always do with that method formerly known as velocity banking. So let's go ahead and watch and see what's up.
All right, let's talk about how much money I spent on law school. Take your Xanax now, wash it down with some water. We're good? Okay, I have my numbers here. Let's go over them. Keep in mind, I went to the University of Miami in Miami, Florida. I was on a 50% tuition scholarship, and yet this is what I spent.
Here's the thing. It's 2026. Get rid of the paper notebook and use Excel, right? Am I the only one surprised that in 2026 we're all still using paper notebooks? It's the era of AI. At least use a spreadsheet, okay?
So my tuition was $12,000 a semester. Law school is 3 years. There's 2 semesters per year. That's 6 semesters total. Multiply $12,000 by 6 semesters, and you're at $72,000 for tuition alone. Okay, your books you can estimate are around $500 a semester times six, that's $3,000. Your rent, Miami rent, is absolutely outrageous. I'm just going to estimate that you're going to spend $1,500 a month on rent. This is assuming that you're in a 2 bedroom or a 3 bedroom and you're splitting rent with some roommates. The average 1 bedroom apartment in Miami right now is renting for around $2,400 a month. So we're going to lowball it and estimate that you're spending around $1,500 a month in rent. That is $18,000 a year times the 3 years you're in law school, and you're at $54,000. Now, let's say you want to have a life. You want to do things outside of school, right? You want to go to the bar with your friends. You want to eat food. You want to, I don't know, get your nails done, get your hair done, whatever. Do things guys do too. I don't know. Cost of living. Let's just estimate it's $1,000 a month. That's $12,000 a year multiplied by the 3 years you're in law school, and you're at $36,000. So let's add it all up. $72,000 for tuition. That's on a half scholarship. $3,000 for books, $54,000 for rent, and $36,000 for your cost of living. You are at a grand total of $165,000. Now let's pretend you didn't get a scholarship. Let's pretend like you're the majority of the people and you're paying full tuition to go to law school. Your tuition at University of Miami is going to be above $24,000 because I'm assuming they've raised the cost of tuition since I've been there, but let's just go with 24,000 for right now. Multiply that by 6 semesters and you're at $144,000 for tuition alone. Add in the cost of rent, cost of living, and your cost of books, and guess what? You're at $237,000. Let me say this a little louder for the people in the back. If you don't know for a fact that you're passionate about the law, that you want to be a lawyer, that you were put on this earth to be a lawyer, don't go to law school. Please save your money. Do you know what $237,000 can do for you? I'll give you a hint. It's not a degree.
Okay. I don't know what she meant by that. And seems like like she took this video in 2022 too, and I gotta say she has this look where it's like she almost looks like one of those Valley girls, and then like here she looks like one of these like intellectual law professor types. So it's been about 4 years, and amazing how in the course of 4 years, kind of that look changed, right? So she looks pretty good either way. You know what I'm saying? Anyways, all right, so let's go ahead and get started and pay off debt using something that we used to call velocity banking. And long story short, the state government of Illinois actually pursued the Kwok brothers, another YouTuber, with a cease and desist letter, and said you can't use the word banking because you're not a bank, right? And so they fined the Kwok brothers $20,000. Okay, so we're going to assume that we have a pretty good salary, 170,000 a year. I think that's like big lawish territory. Everybody says that big law is quite awful, and to be honest, I don't know because I don't have a law degree, but that's what everybody says. Like it's like slavish hours or something like that, and you got to work your tail off. But that's where all the big salaries are, and I guess I'm just wondering like how to become the top of the pyramid of big law. And like, why is it that once you reach like the partner status, you don't change things if it's so awful? But maybe that's just how things are. Like every generation inherits a mess, and then they don't make it better for the next generation, which is why we're probably all in debt. So, anyways, so let's go ahead and get started. And how much debt do we have here? 108,000. 108,000. So, um, is that reasonable for? I mean, she said 200,000, right? So let's just do this. I'm going to change this. Was it? Did you say 200,000 or she 200 something thousand? Let me just quickly
Were
check.
put on this earth.
237. 237. Dang, she does look like a Barbie doll. She's like law school student Barbie, law professor Barbie, like legally blonde. I think she's more legally blonde than the other legally blonde chick. All right, so let's just do this 237,000, and we're assuming that all the loans paid for the tuition and the rent and all that, and you gotta have fun in Miami, right? Just have fun with the $200,000 student loan hanging over your whatchamacallit. All right, so let's just do this. Let's see how much we're over. Actually, B9 to P23. P23. Oh yeah, I gotta update this. My bad. You're seeing me do this in real time. So let me go ahead and do this. 237,000, and then this is our um, law school payment. And let me go here. Okay, so now we're negative $1,470.10 short. Uh-oh. What do we do here? We're going to use what we call the velocity debt cannonball method, formerly known as velocity banking. Can't use that where it's banned, especially by the state of Illinois, to help pay off debt. And what is this super secret method? Okay. Well, this super secret method is we're just not going to save money and use a line of credit to help us not save money. That's all it is, okay? So this is a debt payoff strategy, and with this strategy, you're going to look at every single debt that you have. So, in every line item in your expense breakdown, or in every debt that you have, you're going to put as a line item in your expense breakdown. And we see that we have 8 credit cards here: an auto loan, the $237,000 law school loan, a $270,000 mortgage, and $2,500 in personal expenses. So, I'm assuming we're not living in Miami because I'm pretty much actually, you know what? I hear that Miami has various price points, so it's not like all $1 million condos, right? I think I've seen like $100,000 condos in like Miami. Well, let's say we're in Miami, $270,000 mortgage, okay? So what we're gonna do is with this velocity debt cannonball method, have the same income and the same expenses, but we're going to do something crazy. Whether we have positive cash flow or negative cash flow, what we consider to be traditionally as cash flow, we're not actually going to save money. Okay, the saving money thing is not a thing when we're doing the velocity debt cannonball method. We can't say velocity banking; that word's banned, right? State of Illinois said, especially if you're going to conduct a business and provide a service with this. No, we're not going to do that. All right, so now this is what we're going to do. So we're negative 1,470.10, and so if we cannot increase our cash flow, then we're probably going to have to reduce these personal operating expenses as best as we can, right? And so if you don't know, we have to also figure out how to pay off our debt, and we put it in a ranking order. So if you don't know what the cash flow index is, it's basically a formula of the debt amount divided by the payment. And then so you see right here, and you see that this one is the highest one. So this cash flow index. So think of this as a ranking system. The higher the number, that's the one you want to pay off last, and the lower the number, that's the one you want to pay off first, especially the ones below 50. Why? Because you get more bang for your buck. So if you take a look here, if I pay off the mortgage first, I literally have to give someone $270,000 to only get $1,600 back in my cash flow, right? I literally give someone 270K for 1,600, whereas I can pay off these two, which is 57,000, and get more in cash flow than paying off the mortgage, right? So it's all about bang for your buck in terms of cash flow. And so what we're going to do is we're going to assume that we have access to something called a line of credit. So what's a line of credit? It's basically a financial tool where you can borrow money, pay it back, and then use it over and over again. So if you don't know, the home equity line of credit, business line of credit, personal line of credit, they're all pretty much the same except that they have various contexts, but the way that the product works is pretty much the same, right? So um, so we're going to assume we have access to $150,000 home equity line of credit. Now, if you have negative $1,470.10 in cash flow, will the bank give you a free and clear line of credit? The answer to that is no, because banks don't lend money to people who need it, right? Banks don't lend money to people who need it. If you're a bank and you see someone who needs money, you look the other way and then you run, assuming you're an actual person, not a building, right? You look the other way and you run because people who need money don't pay you back. And so if you ever like enter the lending industry and decide I'm going to become a lender, obviously you have to underwrite clients. And when you see clients who need money, that's basically telling them they're not going to pay you back, right? Banks don't lend money to people who need it. Okay. Now, why do we assume that the bank is going to give us a free and clear line of credit? Is because it makes demonstration much easier, the value proposition of having a free and clear line of credit. But unfortunately, you have to do things in a certain order of operations. And if you want to see a more realistic scenario, join the YouTube channel memberships, 99 cents only, where we actually go through a realistic scenario, real life case study of someone who had 22 debts, $4 left over in checking and savings, and makes about 5,000 a month in income. Okay. All right. So let's go ahead and do this. So now, um, what we're going to do is tally up the low cash flow index numbers, which is the credit card debt. So 5, 8, 15, 27, 30, 7, 10, 35, right? And I'm going to go ahead and sum it up. So that's $137,000. And we're just going to do a balance transfer and assume, okay, we're just going to assume, right, that the money, no, not the money, that the debt is just transferred, right? So we have the same income, probably working a big law firm in Miami in a very cheap condo, not the $1 million condos in the 200, $300,000 condo. Um, but we're going to assume that we just are able to transfer the debt, okay? And guess what happens when we simply transfer the debt? Oh my goodness. Whoopsie. These 8 credit cards go to zero, and now we're at almost $3,000 of cash flow. So this debt is actually going to take us a long time to pay off if we have $137,000 of debt and we have $3,000 of cash flow. But let's just see how it goes, right? So now let me just do this, I2 plus 1, and then we're going to do G2 plus H2 minus 2980.73. And then what we're going to do is calculate the average daily balance, right? Let's go ahead and do that. Multiply by the interest rate and then divide by 12. Okay? So let's see if the balance goes down. Yeah, it does, right? Balance is going down. And we'll see how long it takes for us to pay off the credit card debt. So the credit card debt does take us a lot longer than normally does because we're in negative cash flow territory. But in 55 months, so usually when we're like at zero cash flow, it takes us about 3 years to pay off the credit card debt. But once we're in negative cash flow and we have a line of credit, it's going to take us a little bit longer. So in this case, it'll be 55 months, right? So now we're going to just do this. So the 55 months, that's the milestone of paying off $137,000 of debt. And remember, we were in negative cash flow. We were, negative $1,000 of cash flow is pretty serious business. You know what I'm saying? And so now I'm going to go ahead and copy and paste, right? All this. And now let's see what the current balance of these loans are. And hold on, let me just do this. So I have this loan calculator right here where if I put in the debt, it'll tell me the current balance. And then you see right here that this car loan is pretty much almost gone, right? So we could just put it into the line of credit. Let me just go do that right here. And then I'm going to just do plus 2229.34. and then we see that it's gone within a month, right? And then now this is 0, and so 56 months, that's going to be 137 plus 25, and then 162k, 162k. And then we have the student loan and the mortgage. Let's see at 56 months what the balance of the student loan is. So 56, 56. So it's about 143,000. Not bad because we start at 237. So we kind of went chipped down to balance a lot, but we paid $54,000 of interest, right? So we paid a lot of interest going to law school, paying the mortgage. So now at this point we have two options, right? We can actually make extra payments to the loan, right? So that's number one. So if we have $3,429.95, we just put that as an extra payment. Or we could do something called chunking. So what is chunking? Is you're just moving a piece of the loan into the line of credit. And I'll show you how this works with the band calculator because we can't say banking anymore. So what we're going to do, and let me just kind of just do this right here, is I'm just going to fill in the details of the um, of the loan. So 6%, 6%, 237,000, and then the current balance is 143,805.75. Whoopsie. Let me go right here. Okay, so let me just do that. Okay, and then what's the payment amount? It's 2361.19. So 2361.19. And then I just got to calculate the income and the expenses. So the expenses is everything except for the loan we're trying to pay off. So you just beat these two, and then bam, sum 4188.87. All right, so 4188, 4188.87, and so that's 2 years. Okay, so 2 years, it's paid off. Woohoo! All right, so we struggled for a little bit. So now this is 0, and then now it's 56 plus 2 times, actually just be 24, right? So that would be but 80 months, right? 80 months, and then that would be 162 plus 237, so that's 399k, and then so 270. All right, so 270,000. Now we just do the same thing again, right? So at 80 months, we figure out what the balance of the loan is. And then, so the balance is 245,000. So we just do the same thing again. So basically, what does this mean? And I might have just kind of glossed through it. It just means you're moving $11,000 into the loan of the loan into the line of credit, and then you're putting your entire paycheck, taking your expenses out, and then rinse and repeating over and over again. All right. So let me just go ahead and do this, and we're going to just put the details of this loan right here. So this is going to be a 30-year mortgage, right? So this is going to be 30 years. And then what's the interest rate? It's 6.4. Yeah, and then what's the payment amount? The payment amount is 1688.87. So 1688.87. All right, so now let's go ahead and do this. So original balance is 270, 270,000. The current balance is 245,250.01. 245,250.01. And then what is the living expenses? 2,500. Everything except for the loan we're trying to pay off. And look at that, we paid that off in 3 years. All right, so now let me just do this. So 80 plus 36, that would be 116. So 116 divided by 12. So that's 9.67 years. And then we're debt free, right? And how much debt is that? So let's just do this. So it'd be 399 plus 270, right? So that's $669,000 of debt. $669,000 of debt. So, yeah. So basically, we were struggling um, for a while because we started at negative cash flow. And so if you start at zero cash flow, you could get rid of the credit card debt in less than 3 years, and I think all the debt should be gone in like seven, according to my experience. But because we started at negative cash flow, it set us back much more than we should. But it's okay. I mean, after we are able to put all of our money into debt, now we're doing much better than we were before, right? And now we're positive cash flowing, so 7 grand a month, which is not bad. That's insanely good, right? All right, well, that's it for today, folks. This is Korean Lanta Mentorship here with another video. Um, I don't know if you know this or not, but I'm actually part of a YouTube membership program, and they're really encouraging YouTubers to make like members only videos. And they have like these perks, right? They said, "Oh, make one members only video, and then we'll give you a sweater." And then YouTube shipped me a sweater. So that was pretty cool. And then I think I have to create like two more videos that are members only, and then they'll give me like a YouTube branded gym bag. So I'm gonna go ahead and work on that, probably even today. All right, well, have a great day, everybody, and I'll see you on the next video.